Hello IS, I hope you're all doing good. So, as we discussed in the previous video, I am here with the amendments video for your CA Inter Direct Tax. This is specifically for your Jan 2025 exams. This is specifically for your Jan 2025 exams. Now, there is a specific reason why I've come this late, people. I know your exams are just around the corner, but I wanted to come forward to this. There is a very simple reason. I was waiting for the September suggested answers to come in. Yes, there was a lot of different interpretations which ICI has made in the September exams, and therefore I wanted to really wait for it, and that is why this video is extremely critical for all the students who are going and appearing for Jan 25. Whether you have studied from me, whether you have studied from another faculty, it does not matter, people. I can assure you there will be at least this one amendment which you would not have been informed till date. So therefore this video is extremely important for you the end. Yes, while I will be also trying it from my best, for those students who have already started watching the video, there will be one small request. As and when you see the amendment, if you can just put a timestamp for your other friends also to look at it, it will become easier. Yes, you help one student, they will put the next timestamp and we can go forward from there. Yes, while I also do it from my end, I would request you also do it so that you can also benefit yourself in case you want to watch it in the future. I'm not going to be wasting much time after this, people. Let's quickly dive into the topics and let's understand what are the critical amendments for your Jan 2025. There are not much, but there are important amendments, and therefore let's focus on those. I'll not be going in through sums and everything because that would be lengthy process, especially now that you have already come far. I just wanted to highlight the critical things for you, and therefore we're going to discuss on those things. Yes, on that note, people, let's start quickly. I don't have any amendments to discuss with you from chapter number 1, which is your basics of income tax. So I'm going to take a forward from there. I am moving on to my chapter number 2, which is your rates of taxes. Yes, what are the critical amendments in your rates of taxes, people? First thing which you need to know is that you have amendment relating to your online winnings. An amendment relating to your online winnings. The amendment which comes and clarifies that going forward, if you have any online winnings, it will be taxable at the rate of 30%. It will be taxable at the rate of 30%. The rule is very simple. You're only going to tax what you win. You're not going to tax everything. So if I'm going to infuse money into a online game and then I'm going to repay back that money, that is not taxable. Only what I earn extra will be taxable. In simple words, the formula is going to be the closing balance at the end of the financial year plus the amount withdrawn by you during the year minus the non-taxable deposits, meaning money which I deposited into the fund, minus the opening balances, because that would have been taxed in the previous years or would have been non-taxable as the case may be. Yes, so that is what you need to take into mind, people. Critical thing for you to know, these are the only 4 components which are part of your computation. If you are going to have any other expenses like commission, brokerage, any other referral fees, all those kind of expenses are going to get fully ignored. You cannot claim those as deductions. That has to be fully ignored for the purpose of computation. Do not take those into consideration. Those are ignored. Rule number 2, if this answer comes up as negative, meaning you have made a loss, income tax will say ignore the loss of, number is 0. Ignore the number, and therefore number is 0, which means if you have profit, you pay tax at 30%. If you have a loss, income tax will say ignore the loss of, you are not getting the loss benefit. Yes, amendment number 1 from your tax perspective. September 25 had an amendment question on this. Funny thing, what happened, ICA came and notified saying all options which they gave was wrong. And therefore that amendment was turned useless because they would like to rectify their mistakes. Expectation that Jan 25 will see this question once again. Yes, so please focus on your online winnings. Once you're done with that, people, I'm moving on forward. We're looking at the next chapter called residential status. I don't have any amendments relating to residential status, so I'm ignoring that. Moving on forward, we have something called income from salaries. 2 critical amendments for you people here. Critical amendment number 1, leave encashment has an extraordinary limit of 25 lakhs now notified. Extraordinary limit of 25 lakhs now notified. Till last year it was 3 lakh rupees. Now it is 25 lakh rupees. So 25 lakh rupees amendment in leave encashment. One thing to be critically kept, people, in mind, that when it comes to leave encashment, you're only getting this as an exemption provided it is during exit, meaning after employment. In case ICA gives you a question and says during employment they have given you leave encashment, that is fully taxable. So you're only getting this question in exam if at all they give you a question where the person is retiring. If they're going to give you a question on retirement, then they'll also be testing you gratuity, pension, leave encashment and various other components. So bear that alone in mind. Unless and until they test your retirement question, you don't have to worry about leave encashment because that is anyway fully taxable. Amendment number 1. Amendment number 2, people, is somewhere in the very end of this, which we call as perquisites. Income tax has notified from the current year until last year, people, RFA had a different rule. RFA had a different rule. The rule was that for the first 15 lakhs, you have to take RFA as 15% of the salary. You have to take RFA as 15% of salary or the actual charges paid by the employer, whichever is lower. Whichever is lower, that is what the provisions were until last year. In the current year, middle of the year, after 31st August, income tax notified that from 1st September, if you give a property on RFA, the number will dip down to 10%. The number will dip down to 10%, which means in the current year, people, if you see an RFA question, in the current year, if you see an RFA question for the months April to August, you will take RFA as 15% of salary. You will take RFA as 15% of salary, and then from September to March, you will take RFA as 10% of salary. You will take RFA as 10% of salary. This is what you will take for the purpose of salary computations, people. If it is on lease, then you will take the higher charges also, whichever is lower. So please bear that in mind. If you have any critical doubts on this and you don't understand this, please refer September exam. You have a question number 3, salaries topic, where they gave you an adjustment relating to RFA, a good question for you to practice and understand. So please do that question. You will understand the topic a little better. Yes, second amendment in the same, people, which comes and says that if you are giving an RFA for more than 1 year, for the second year and all, you will not do RFA computation. You will rather do an inflation adjustment. You will ignore this amendment for your exam. People, this inflation adjustment will only come from next financial year, because current year only they have notified the amendment. So this will only come from next financial year, will not come for your exam. In September exam, ICI came and gave you one adjustment relating to this, where they said RFA ka you can find inflation index. And then ICI itself came and put a note saying this inflation index is only for next financial years and not for this year, and therefore not important for your exam. Again, people, when you do the September exam, you will understand this. Other than that, if you would ask me, amendment not to be read for exam purposes. Ignore the amendment off and go forward for your exams. Yes or no? Yes. Amendment number 3, people, while you may not see it in my book, I will clarify this to you. Amendment number 3 in the current year comes and clarifies you are now eligible to claim standard deduction of 50,000 even on DTR. You are eligible to claim standard deduction of 50,000 even on DTR. Under DTR, normally you are not eligible for any section 16 amendments, any section 16 deductions, but income tax is notified from the current year, DTR can claim standard deduction. Yes, we will discuss once again when we do DTR, but right now I am just clarifying it to you. People, what is DTR? Default tax regime. What is DTR? Default tax regime. So please pay that attention. Yes, moving on forward, people. IFHP has no amendments, therefore I'm skipping IFHP. Moving on to PGBP. One amendment for you which is seeing on the screen, a theoretical amendment, people, where they come and clarify going forward any kind of gift which a person receives in business, whether it is in cash, whether it is in kind, it doesn't matter, everything is taxable. So if you get a question in exam where they say that the person has received free samples, any kind of car, any kind of air ticket, anything which the person receives under a business, you just take the value of that and you tax it off. That alone you have to keep in mind. Other than that, if you come and ask me, business head has no amendments. Your computation will remain the same. One critical amendment which you will see at the end of this chapter, people, we are looking at what we call as presumptive taxation. So if I quickly move to presumptive taxation, you will see the amendment. What was the amendment, people? Until last year, the income tax had come and notified saying in presumptive taxation, you will only follow presumptive taxation if your turnover is up to 2 crores. Current year, they've come and notified that if I find out that your turnover has 95% of the turnover in permissible modes, then you can also do presumptive for 3 crores. Similar amendment is there in your 44 ADA professional case, where normally the turnover was 50 lakhs, but if you do turnover at least 95% in permissible modes, they will give you turnover of 75 lakhs. In simple words, whatever's the old turnover, add another 50% to it. 2 crores becomes 3 crores. 50 lakhs becomes 75 lakhs. People, my expectation, this is extremely important from exam perspective in the current year. This is extremely important from exam perspective in the current year, because for May and September both they have not tested presumptive taxation, and it has a critical amendment because this will be the silent adjustment. People, I've already told you in the class also, when you see a PGBP question, always start from the right side. Look at what the turnover is. If the turnover is something which is looking below the limits, you have to check for presumptive, even if the question does not ask you to do it. Even if the question does not ask you to do it, if the question is silent, you have to do presumptives. And one very beautiful question can be devised by ICAI, where they may give you this amendment of 65 or 70 lakhs, and they may ask you to compute PGBP. If you miss out at any point of time, you may lose marks, because maybe ICAI would have tested on presumptive taxation. So please pay very, very important attention to this. You have to follow presumptive taxation. If your turnover is 2 to 3 crores, 50 to 75 lakhs, depending on whether you make the payment by permissible modes or don't make the payment by permissible modes. Yes or no? Yes, that is what the amendment is when it comes to PGBP. Moving on forward, people, one of the most critical chapters for your exam, because I'm expecting a question of 4 marks in it. I've already told it in the previous video also. We're looking at the chapter called capital gains, specifically from immovable property. Yes, immovable property porthavarikum, people, income tax has come and notified some critical amendments. Amendment number 1, which you see on point number D, it says any kind of interest on loan which is taken for a house property which is already claimed as deduction under IFHP or Chapter 6A will be ignored for the purpose of computing cost of acquisition or cost of improvement. Cost of acquisition or cost of improvement. Let me put it in an example and give it to you, people, so that you understand this better. Imagine a case where I come and tell you that there is a house property which you have purchased. There is a house property which you have purchased, and you purchased the house property by taking a loan. What did you do? You took a house property by taking a loan. Imagine what happened is you took a loan for the house property. Now the problem what happened is house was not ready. So whatever loan you took was pre-construction loan. And on this loan you have ended up paying an interest of 40 lakh rupees. You have ended up paying an interest of 40 lakh rupees. Now for those who remember your IFHP chapter, the provisions come and say when you have pre-construction interest, the interest can be allowed over the next 5 years. Which means every year you can claim a deduction of 8 lakh rupees. Agreed, not agreed? Yes. Now the one thing which you people have stopped paying attention to is when it comes to this, you also need to pay attention to what kind of house property do I have. If I have an LOP house or do I have an SOP house? After I completed my construction and I lived in a house, did I live in a house as LOP or did I live in the house as SOP? People, if I lived in the house as LOP, then I had no problem, because I would have claimed this whole interest as deduction. Which means I would have claimed the full 40 lakhs as deduction, and therefore my cost of acquisition will not change. But imagine, people, if I have taken the property as SOP property. You are now eligible only for a deduction of 2 lakhs per annum. Which means for the next 5 years, people, I would have claimed a deduction of 10 lakhs. 2 lakhs into 5, 10 lakhs I would have claimed a deduction upon. Now understand, people, my total interest amount was 40 lakhs. I was able to claim only 10 lakhs. Balance I did not claim. In that case, income tax comes and says the 30 lakhs which you did not claim, you can now add it to the cost of acquisition of the house property. Which means in my example, if I would have taken the house for 40 lakh rupees, that is the interest. So if I imagine I have taken the property for 4 crore rupees, my cost of acquisition will now become 4 crore in plus 30 lakhs, 4 crore plus 30 lakhs, which means my total cost of acquisition becomes 4.3 crores. My total cost of acquisition will become 4.3 crores before indexation, people. So you can now then index the number of. Yes, please pay attention to this. This is something which ICAI can test you, and a beautiful question can be designed along with pre-construction interest. Please pay attention to this from your exam perspective. If you have a doubt, you reach out and drop a comment. I will explain this once again to you. Yes, right now this is what the amendment is. Critical amendment number 2, people, is in your exemptions chapter. A critical amendment number 2 is an exemption chapter where income tax has now come and notified that for the current year and going forward, if you are going to buy a new house, you cannot invest in the new house more than 10 crores. You cannot invest in the new house more than 10 crores. So which means under section 54, when you invest your capital gains, you can now invest only maximum 10 crores of capital gains. You can now invest only 10 crores of capital gains. How does this work, people? Take a simple example where I'm coming and saying that if you have a full value of consideration of 50 crores, your cost of acquisition after indexation has come to 30 crores. You are having a long-term capital gain of 20 crores. Imagine if this was section 54. Income tax would tell, if you invest your capital gains, you get a deduction of capital gains. Which means if I invest 8 crores, I would have got 8 crores ka deduction. If you invest 10 crores, you would have got 10 crores ka deduction. But if I invest 15 crores, income tax will say, no, you are not allowed to invest 15 crores. I will assume you invested only 10 crores and therefore I'll give you 10 crores ka exemption. Same logic, if I invest 20 crores, income tax will say, you can't invest 20 crores, you can only invest 10 crores and therefore I'll give you exemption of 10 crores. However, people, imagine if this was 54F. Now those who understand 54F, income tax says you have to invest your consideration value to get your exemption amount. Which means had you invested 50 crores, I would have given you 20 crores exemption. So if I invest 50 crores, I should have got 20 crores. But the problem is income tax is saying, boss, you can only invest 10 crores. You can't invest 50 crores. You can only invest 10 crores. Which means, people, if I had invested, I would have got 20 crores. I have now only assumed investment of 10 crores. Income tax will say you will get only 4 crores. Yes or no? That is what the critical amendment is. Please pay attention to this amendment, because in this exam ICI will expect you to know this. ICI will give you a case where they'll come and say the sale value is more than 10 crores and they will tell that you have purchased a house for 12 crores. If they give you that, you will still make an assumption saying I have only purchased for 10 crores. And therefore I will only get an exemption of 10 crores in 54 or proportionate exemption in 54F. Please pay attention to this. Yes, apart from this, people, capital gains is fairly over. You don't have any other amendments in capital gains, so I'm moving forward. You then have something called business reorganizations, no amendment in that. You then have your transfer to owners, no amendment in that. You have your chapter called IFOS. Let's look at the chapter called IFOS, people. What amendments you have in IFOS? Amendment number 1, while it is not showing here, but I'll show it to you subsequently. Amendment number 1 comes and says that family pension deduction is now eligible even in DTR. Family pension exemption is now available also in DTR. So even if you're opting for DTR, you can claim this deduction. Amendment number 1. Amendment number 2, people, they are coming and saying when you now issue premium on issue of shares, it will be applicable for any person who's a shareholder. Until last year, they used to come and say it will only be taxable if you give this premium on issue of shares to a resident person. Current year, they say it will be applicable for both. People, from my gut feeling, this is important for exam. For a simple reason that this has been scrapped in the next year. After Jan 25, this is not even there in syllabus, and therefore this is the only one attempt which they can test you on this. So therefore, please pay attention to this. A very beautiful question is there in ICS study material itself. So please go through the question and you should be able to score marks in that. Yes, please pay attention to this question. Second, people, is your life insurance policy. Now this one is a detailed one, and I honestly would come and tell you, don't read it. Yes, this is a coming and provision which is coming and saying that if you have a life insurance policy which you have paid premium in the current year, in the future when it matures, that time you will be taxed on it. From your descriptive perspective, people, you will only get taxed in maturity year, and therefore they cannot test you because descriptive questions will be for assessment year 24-25. will be for assessment year 24-25. If at all they want to test you on this, they will test you as an MCQ question. They will test you on a MCQ question. So I don't expect this question to be critical from an exam perspective other than MCQ. My gut feeling on MCQ also, people, it cannot be tested because it's a very lengthy thing. They'll have to create a case study around this. If they have to create a case study, they'll have to spend 6 to 8 marks in that itself, which they would not like to do. So I have a gut feeling it will not come, but from your side, if you want, you can refer it quickly, people. Yes, a very simple provision, nothing complicated about it. Choose to ignore off. Yes, if you're done with IFOS, people, we are moving on forward. We are looking at the next chapters called dividends. No amendments in dividends and therefore closed. You have a chapter called clubbing. No amendments in clubbing and therefore closed. You have your set off chapter. You have a set off chapter. Now this is something which I'm sure no one is aware about, because even ICI did not inform you about it. Even ICI did not inform you about it. Your September, people, got an corrigendum in your study material. Your September attempt got a corrigendum in your study material, which ICI forgot to inform everyone. Yes, they've notified it on the web hosting portal, but they did not give an official confirmation, so no one read for it. No one read for it, and it came in your exams also, people. What is the amendment? Income tax comes and says, boss, if you are going for default tax regime, what are you going for? If you are going for default tax regime, you know already, we have discussed in the class also, that this intra head is not allowed. This intra head is not allowed, meaning if you are going under default tax regime, income tax comes and says you cannot set off your HP loss against any other loss, any other incomes, against any other income. So that intra head is denied for you. The intra head is denied for you. The critical thing which ICA has notified, is that if you are going for DTR, if you are going for default tax regime, you cannot carry forward the loss also. You cannot carry forward the loss also, meaning, people, in simple words, if you have an SOP loss, it is not allowed because DTR does not permit SOP loss. If you have an LOP loss, you can now adjust LOP against LOP income. You can now adjust LOP against LOP income. If you are not able to do it in the current year, it will permanently lapse. It will permanently lapse. You will not get any deductions for that. You will not get any deductions for that. Permanent lapse, and therefore no deductions on this. No deductions on this. Very, very critical for your set off question, people. Your question number 4. I say would like to test you on this question. So please be very, very careful about this question. Please be very careful about this question. From the current year, no carry forward of losses in case you are having LOP loss and you are opting for default tax regime. This is one critical amendment for you to know, people. Pay attention to this and read it for your exam and go. Otherwise, this chapter has no other amendments, so therefore I'm skipping forward. Chapter 6A, people, no critical amendments except for something called Agnipath scheme. Now, I don't have an opinion, but I would come and say this is not important for exam because this is only for government employees. ICA has stopped testing government employees after a point of time, so therefore not critical. If you want, you can pause the video and look at it quickly. Agnipath scheme, what kind of deductions are eligible? My gut feeling, not important. Yes, after that you are moving forward, people. What other amendments do you have? We are looking at chapter 6A getting over. Moving on to TDS chapter, people. Two critical amendments. Amendment number 1, they are coming and saying that if you have online winnings, you have to deduct TDS. You have to deduct TDS. How much do you have to deduct TDS? You have to deduct TDS at the rate of 30% on the online winnings. Yes, how do you deduct TDS, people? We will use the same formula which we used in your rates of tax. We'll use the same formula which you used in your rates of tax. Closing balance plus amount withdrawn minus opening balance minus non-taxable deposits. Same formula, you have to do 30% TDS. But income tax notifies TDS will also be applicable at every stage of withdrawal, which means if you are getting an overall winnings of 5,000, when you withdraw 2,000 rupees, TDS on that. When you withdraw the balance 3,000 rupees, TDS on that. Suppose if you don't withdraw also, 5,000 they will withdraw on 31st March. 5,000 they will take a TDS on 31st March. Only one thing which I feel is critical from an amendment perspective is point number 4. Income tax says if you are going to receive any online winnings in kind, then if the winnings are purchased from an intermediary, you take the actual purchase price. If the winnings is manufactured by the intermediary, you take the selling price. In all other cases, take the FMV of the winnings. The question from September exam, people, they came and said that in online winnings, I got 6 t-shirts. Which I had manufactured for 10,000 rupees, which I had manufactured for 500 rupees, and I would have given it to someone else for 10,000 rupees. Now you are the winner of the game. In that case, in your hands, I would not take online winnings as 500 rupees. I will take the online winnings as 10,000 rupees because that is what the market value is. That is what the market value is. So please pay attention to that. But the one thing which you need to critically know is that this is ignoring GST. This is ignoring GST. Yes. So if you come and tell me that I have given you a t-shirt worth 500 rupees, which actually would have been sold for 10,000 rupees, and GST is 5%, I will ignore the GST component and I will come and say you will be viable for 30% on 10,000 rupees. You will be liable for 30% on 10,000 rupees. Critical amendment number 1. Yes. What other amendments do you have, people? You have a very detailed amendment in your TCS. You have a very detailed amendment in your TCS, which is your LRS scheme, where income tax has come and notified from the current year. If any kind of transaction took place before 30th September, the rules were that you will not be liable for any LRS up to 7 lakh rupees. After 7 lakh rupees, you will be liable for LRS if the loan is taken for pursuing education, it is 0.5%. If the loan is taken any other purpose, it was 5%. But after 30th September, if you have taken a loan for remittance of education or medical without taking a loan, it is 5%. If you have taken it for any other purpose, it is 20% of LRS number. 5 has jumped to 20. That is what TCS on LRS is. Yes, that is one amendment for you to pay attention to. Yes, can we go forward? Yep. So LRS is one amendment for you to go through. No other amendments other than that in TDS and TCS, people. You can choose to ignore everything else from an amendment perspective. Payment of taxes have no amendment, therefore I am proceeding forward. Yes. Next, in your return filing chapter, people, the first amendment you need to know is that when you opt for 10AA, going forward, return filings are mandatory. Without filing a return time, no 10AA will be granted to you. Yes. Amendment number 2 is in your PAN versus Aadhaar. Now this was tested in your MTP number 2. And has not been tested in your May or September, and therefore my feeling this is very important from exam theory question. 4B is what I'm expecting on this. Question number 4B is what I'm expecting on this. If you don't link your PAN with Aadhaar, these are the following consequences. No refund will be granted to you for any refund which you are eligible for. No interest will be granted on such refund. TDS will become at a higher rate of 20%, and 206CC will be at a higher rate of 5%. Critical amendment for you people, theory question, so therefore please pay attention to it. Yes, that is one amendment to be done. Second, and like I told in the previous video also, I have a gut feeling that 10AA becomes important for this current exam for some reasons, because there are multiple amendments. Amendment number 1, I just told you about this. If you are going to go for presumptive taxation, if you are going to go for 10AA, you need to mandatory file your return on or before due date. So please do that properly. Amendment number 2, income tax comes and says if you want to take anything as a part of your numerator for export turnover, the money going forward has to be received within 6 months from the end of the previous year. Until last year there was no such rule, which means you can receive the money whenever you want. But now the rule says that you have to receive the money within 6 months from the end of the previous year, same as section 80 QQB. Which means if I have an export turnover of 70 lakhs, but I have received in my bank account only 60 lakhs, income tax will assume only 60 lakhs as my export turnover for the purpose of numerator. Divided by total turnover, you will lose deduction to that extent. But I say income tax also gives you a levy, where income tax comes and says even if you don't receive the money within 6 months, it is sufficient that you receive the money in your bank account, which is maintained outside India. If RBI approves that for you, then I have no problems. I will still consider that as a deduction. So 2 things critically for you to know, people. From the current year, export turnover will only be calculated if it is received within 6 months from the end of the previous year in India or in a foreign bank account after getting RBI approval. 2 critical amendments do you know for 10AA, people. Yes, AMT has no amendments. Then comes your default tax regime. Most important from exam perspective in the current year. Some things you know, some things I will tell you. Yes, amendment number 1 is your tax rates. Income tax says from the current year, first 3 lakhs will be taxable for no rates. The next 3 lakhs will be taxable for 5%. Next 3 lakhs will be taxable for 10%. Next 3 lakhs will be taxable for 15%. And finally, last 3 lakhs will be taxable for 20%. After that, everything becomes 30%. So for 0 to 3 lakhs, it is 0. 3 to 6 lakhs, it is 5. 6 to 9 lakhs, it is 10. 9 to 12 lakhs, it is 15. 10 lakhs to 12 lakhs to 15 lakhs, it is 20, and after that it is fully 30% changes in tax rates. Second, people, if you are going to have an income up to 7 lakhs from the current year, you'll have a rebate of 25,000. You'll have a rebate of 25,000. Until last year, it was the same rebate as default tax as alternate tax regime. Current year amendment, after income of 7 lakhs, you will be liable for no rebate. Up to 7 lakhs, you can claim rebate up to 25,000. Then you have this new concept in the current year, people, which is called marginal rebate. Same provisions as marginal relief and surcharge. Same provisions as marginal relief and surcharge. In simple words, people, if I come and tell you that your income is 7,01,000, people, if your income is 7,01,000 under default regime, 7 lakhs you would have paid no tax. 7 lakhs you would have paid no tax because you were eligible for rebate. Just because you earned extra 1,000 rupees, I am asking you to pay tax on the whole number, which makes no sense. Income tax will say, you surrender me 1,000 rupees. You surrender me 1,000 rupees. I will not ask for any further tax. So I will ask you to surrender the 1,000 rupees plus the cess on this at the rate of 4%, and therefore nothing else will be payable. That is one amendment for you in the current year. Very good questions can be created from an MCQ perspective. Pay attention to that. Third amendment, people, they are coming and saying when it comes to surcharge will remain the same as alternate tax regime, with the issue that now you will not have any surcharge on 37%. Now you will not have any surcharge on 37%. Surcharge of 37% has been removed because it is only for alternate tax regime. Under default tax regime, no surcharge of 37%. Your surcharge will stop at 25%. Yes, this is what I wanted to pay attention to, people. Yes, September exams, beautiful silent adjustments which no one paid attention to. ICI has taken an assumption. If the return is filed late, ICI makes an assumption that the person can only opt for default tax regime. If the person files his return late, ICI makes an assumption that the person can only opt for default tax regime. I want you to mark this as important. Very, very critical from an exam perspective, people, where ICI is coming and saying, boss, if you have not filed your return on time, you would have not opted for alternate. And the rules of income tax come and say that you should have filed a form to opt for alternate. Because you have not filed the return, I would also assume that you have not filed the return. And therefore you will now only be liable for default tax regime. People, from the current year, watch out. If you get a question in an exam where they say that the return is filed late, and they ask you to compute total income can only be as per DTR. Income cannot be as per ATR from the current year. They notified this in your September corrigendum and then asked questions in September exam. No one was able to answer because everyone opted for alternates. No alternates if you are filing the return late. Mark this as important. Read it multiple times. Focus on this in exam. You will get a question on this. No filing return on time. Only opt for DTR. Cannot go for ATR. Alternate tax regime not allowed. Only default tax regime will be taken. Other amendments I have already informed to you, people, that if you are going for default tax regime, you are now eligible for standard deduction of 50,000 rupees and you are eligible for family pension of your 15,000 rupees. And that is all the amendments which are there, people. Nothing else is important from an exam perspective. Like I told, Agniveer corpus scheme and all, you're not going to test for your exams. Yes, amendments, if I have to quickly tell you what important, people, capital gains amendments, extremely important. Default tax regime amendment, extremely important, especially the piece that if you're not filing the return on time, you have to only file default tax regime. And second thing, if you have an HP loss, you can only set off against HP income. If you're not able to set off in DTR, no carry forwards itself, permanent loss. permanent loss. Two critical amendments for you to know. And in capital gains, the amendment that if you're not able to claim your interest on loan, you can add it to your cost of acquisition. Third amendments of your salaries, people, RFA amendment, annual leave encashment amendment. RFA amendment, annual leave encashment amendment. These are some very, very critical amendments for you to remember from exam perspective before you go for your January exams. Please ensure that you go through these amendments once again and do it carefully. It will be really helpful for you to do it. In case you have time, people, and I'm not forcing it on you, in case you have time, I have prepared a very beautiful mock test question paper this time, covering major of the amendments, and I'm going to leave the link on this in the comment section. I'm going to leave the link of this in the description and the comment section. Feel free to go through and solve that paper. I will also attach the answers separately on this so that you can check if you remember the amendments and if you understood what we discussed in today's class. I will give you a full lengthy 50 marks ka paper so that you can solve it yourself and see how strong you are. Yes, that also I will do it for you, people. But again, this is only for those students who have completed your other subjects and have time. If you don't have, then this subject will help you. This video will help you do what is justice to the subject. Yes, pay attention to this video and go through this multiple times, or some critical amendments which you did not understand, go through it again and again so that you understand better. If you still don't understand, feel free to reach out to me on WhatsApp and I will give you some examples so that you can understand this better. Yes, I'm keeping this video very small and very short, people, so that you don't waste your time during your exam preparations. It's time for you to start preparing properly. Cover whatever bases you have missed out and focus on that one suggestion video which I prepared last time, and I told you how to strategize for your tax. That is all you would require for Jan 25 exams. I can assure you that the exam will come little easier than September exam, but they will be focusing on amendments and these critical areas we discussed in the previous video. If you focus on those, you should be able to score your exemptions and deserve to get your CA Inter qualified as much as possible. Yes, so please do that, people, and I would be happy to see your happy faces once you come back from the exams and tell me how you have performed. Until such time, people, I will not be disturbing you with any more videos. Take care, have a good time, and spend a good quality time in your sleep, but at the same time prepare equally enough so that you are proud of what you deserve to become. Yes, that's all from my side, people. Thank you. Have a good day.